afternoon. Hello and welcome to this Tuesday's edition of Markets at Noon. I'm Nayantara Rai in New Delhi and my colleague Pankaj Podar joining in from the Mumbai studio. The top story continues to revolve around the surging crude oil prices, public angst, opposition upping the ante against the Narendra Modi government, a clamour for an excise duty cut only getting louder. But the big question is, can an excise duty cut even bring relief to the consumers? How much of an excise duty cut can you imagine? 1 rupee, 2 rupee? Is that enough? Is it time that the Narendra Modi issues instructions to his 21 chief ministers to cut sales tax, to cut VAT and rein in prices? All of that and a lot more lined up for you here on Markets at Noon. Nifty managing to hold on to the green barely. It is trading along the flat line. The oil and gas pack very much in focus. You've got two big earnings today, IOC as well as HPCL from the oil and gas space, and all the oil marketing companies are trading in the negative territory. Joining me now is Vikas Halan, the Senior Vice President at Moodys Investors. He's put out a report today on the oil and gas pack and talked about how maybe the 24,000 crore rupee allocation by the Central Exchequer in Budget 2018 may not be enough. Hi Vikas, this is Nayantara. You know, in fact, on 11th of May, a day ahead of the Karnataka elections, we at ET Now did talk about how suddenly that 24,000 crore rupees allocation for subsidy seems insufficient. Look at the fourth quarter with compensation, which actually has to come from this allocation as well. That's nearly 9,000 crore rupees. The market's now fearing that who's going to be paying the brunt of all of this. If it's not the government, it could be the oil marketing companies that have been making a windfall gain, or the upstream companies, which was the norm during the UPA government. You guys are factoring in that ONGC and Oil India may be asked to pay up.
Yeah, hi, Nayantara. Thanks for having me. Yes, we published a couple of reports this morning, one on how the subsidies actually work in India and how they compare to the rest of the region, and also the report that you're talking about on ONGC and Oil India and how the oil price increase is having an impact. I mean, typically for upstream companies, we always talk about oil price going up being positive, but in this case, we expect that the risk of subsidy sharing is going to be higher. And just to give you some perspective, the upstream companies, the reason why they share subsidy is because they have production from nomination blocks, which they do not share any production with the government, which is the norm everywhere else where there are production sharing contracts. So the subsidy sharing is in lieu of that. And with respect to the amount of subsidy that they will need to share, of course, it depends on what the oil prices are. Don't forget, when oil prices go up, the upstream companies benefit, and the subsidy sharing brings it down a little bit. So what we are saying in this report is the risk from oil price increase and because of subsidy sharing is manageable for ONGC and Oil India, because we estimate that after subsidy sharing, which is assuming the worst case scenario that whatever is the government shortfall that they need to bear, the net realized price for these companies would still be above $52, going up to 56 even. So overall, the risks are manageable. Subsidy sharing risk is increasing. But we do not expect the downstream companies to share any subsidy burden simply because they have not been asked to share any subsidy. And with them paying such high dividends as we have seen over the last couple of years, I think they are already paying the dividend back to the government in one form.
Vikas, I'm going to ask you to just hang on there. It's certainly not good news for upstream companies. While you were speaking, Bharat Forge came out with its results. The stock is under pressure now, selling off by over 8%. Its profit after tax seems to have halved if you look at it year on year, while the margins are stable, 28.5% versus 28.4% year on year. It's the profit after tax which is clearly spooking the markets. It's coming at 100.3 crores as opposed to 208 crore rupees year on year. I'm sure my colleague Karunya Rao will be joining us in minutes from now to tell us why it is that the profit after tax, the bottom line, has taken such a beating. EBITDA, meanwhile, has done better. It's at 418 crores versus 320 crores, but that's not enough to bring some cheer for the stock. It's now trading at the low point of the day, 670 per share at the moment. It's now down by nearly 4% in trade, Pankaj.
Companies always are very, very volatile, Nayantara, when you talk about these companies and, the way they react to their numbers. It becomes extremely volatile. It becomes, quite a heavy business because it's a very, very high operating leverage business. And that's why you're seeing this sort of a reaction. So when you see a downturn, the downturn continues. When you see an upturn, the upturn continues. And that's broadly, the reason why you're seeing this 4% decline right now, 667, 668. Numbers may not be that bad, but that 1% margin miss that they have done, I think that that's something which may not be liked by the street. We'll get more details. Mr. Baba Kalyani will be joining us in some time from now to explain and decode these numbers. The stock is down 3.5%. Let's see what happens going ahead. Meanwhile, we were talking about oil and what's happening over there, so let's focus on that. Vikas, Senior Vice President at Moodys Investors, is still with us. Vikas, you could start from where we left in terms of discussion. Where do you see things stand? How do you see things going ahead as far as oil pricing is concerned?
Yeah, so oil prices are at near 3-year high or more than 3-year high at the moment, close to $80 if you look at Dubai, and above $80 if you look at Brent. So at the moment, I think the next thing to look out for oil would be the OPEC meeting in June and the developments on the Iran sanction and how other countries react to the Iran sanction. With these two factors, we will see the direction of oil, at least in the near term. Over more longer term, as the U.S. production data comes out and U.S. production goes up, and we see more demand data, the price will get a direction from there.
Right. What is the sense that you get about fuel subsidy going ahead? Will we go back to the regime that we were in earlier? Do you think that's a possibility?
So, first of all, we don't think that there is going to be a rollback of price reforms that we have seen over the last 4 or 5 years. Even going back almost a decade, and how the petrol was deregulated and the diesel was deregulated only 4 years ago, and DBTL was introduced. So we don't see that in terms of direction we will see a reversal. Yes, there is going to be increase in fuel subsidies. We've already seen an increase in the quarter ending March, and we will continue to see that increase as oil prices stay high. However, we do not expect any rollback of reforms on the prices. We do expect some subsidy sharing. It will get more clear as the companies announce results today and later this week, how the upstream companies, whether the upstream companies have been asked even in this quarter or not. We'll have to see, wait and watch. We don't expect that to happen in a meaningful way. But the next quarter onwards, we will see what and how the government reacts to these high subsidies.
Yeah, Vikas, I want to take that point forward. In fact, we're all awaiting the IOC HPCL results to see who it is that's going to bear the brunt for the subsidies in Q4 for subsidized LPG, subsidized kerosene, for which the companies have already advanced payments via direct benefit transfer. We understand that subsidy bill could be 9,000 crores. As already discussed, that has to be paid now from the FY19 allocation, which is 24,000 crores. We've had HPCL chairman on the channel a few days ago saying the government is going to pay this. So we may not still get the clarity for the entire FY19, that's Q1 onwards. But what I wanted to understand from you is that while you're not expecting a rollback in reforms and you're seeing so much public angst as we head into 2019 elections, obviously something needs to be done. Is an excise duty cut really the solution? Because how much of an excise duty cut will you have? 1 rupee, 2 rupee? The central exchequer loses a lot of money and it doesn't bring down the consumer's bill. Or is it going to have to be the states which are going to have to play ball? They've been making windfall gains. A lot of these are ad valorem duties. Isn't it time that the states play ball and they're instructed to cut down their duties? Isn't that where the solution perhaps lies?
Yeah, I guess it's a combination of both excise duty cut and the states also chipping in. I mean, if you look at the prices in India compared to the rest of the region, I think India and Thailand have the highest fuel prices. Petrol and diesel prices are the highest. India is the highest, and Thailand is the next highest. So there is, of course, now a situation where these taxes, which were introduced when the oil prices were really low, to keep the prices stable, should now reverse when the oil prices are high. I mean, there are countries who do an automatic mechanism where when the prices breach a certain level, the taxes automatically come down, or there is an oil fund which acts as a buffer. So it's not unheard of a cut in taxes to stabilize prices, and that is something of an easy fix in normal times. But given the fiscal space that the government has, or limited fiscal space that the government has, this decision is complicated and will have to be implemented in along with something else where the government can get the money from. Let's not forget the government has been injecting capital into the banks. There has been NPL issues. So overall, the fiscal space in itself is going to be limited for the government and also for the state government. So it's a complicated issue, but you're right. In order to reduce the stress on consumers, this would be a quick and easy fix.
Okay, Vikas, we're going to leave it at that. Always a pleasure chatting with you. This is, of course, a developing story. I think we'll have a lot more insight after IOC and HPCL's results today. BPCL also to come out. ONGC and Oil India, the upstream companies, will be coming out with their results next week. Hopefully, the management and the top bosses will be more forthcoming on if they've got any insight from Dharmendra Pradhan as well as North Block on how the rest of the year is going to pan out as far as subsidy sharing goes.